So with that, let me just very briefly, I'll just outline the way I see this topic. Since the advent of let's just call it blockchain finance, which goes back to the Bitcoin white paper of 2008, we have seen this take many different forms. And let's just there's private money, there's semi-private money, there's public responses in the form of CBDCs. We've seen in the very private end, speculative assets and meme-based things, all kinds of headline grabbing products, trades. Some of it's been rather unseemly as well. So plenty of funny business, but a lot of dynamism. But we're gonna, and I'm sure we'll touch on that crypto side of things. It is part of the ecosystem, but behind the scenes at the institutional end, there's been an ongoing drive across the industry to see how can we use this technology to create better ways of doing things with licensed, legal contractual securities, whether those are public securities or private, liquid or illiquid, using this technology to open this up to different types of investors, grow volumes, create ways for people to unlock liquidity and expand the markets. At the same time, there's been a lot of challenges in creating this ecosystem, getting it really off the ground. So we want to talk about the promise. We want to talk about some of the challenges. So I'm going to start with you, Henry, because you run a technology platform. You're at the forefront of trying to make these changes happen. You know more than anyone else how exciting this can be and also how difficult it is. Where are you? Where is Fusang right now? And what are you trying to achieve?
Well, thank you, Jane. You said dynamism. I think that's the right word to describe this entire industry. And I think the reason why all of us are here on this panel, and I assume a lot of the attendees are as well, I think is because we look at the crypto and the NFT markets and we say, wow, there's a lot happening there. It's all very exciting. But man, when I look at some of the underlying assets, if any, it all seems a bit shaky. And I'm sure a lot of people saw even yesterday, Vitalik Buterin, one of the co-founders of Ethereum, say, oh, I don't know about a lot of these things being created on the Ethereum blockchain. I'm not 100% sure that creating NFTs around apes really was the original promise of a platform like Ethereum in the first place. And I think what's interesting is not a lot of people remember, but when Ethereum did its own initial offering, they actually put out, and if the original subscribers remember, their offering document had initial public offering stamped right at the top. And they said, yeah, we're a company, we're going to issue an IPO so that people can come and invest into us as an entity. And they very quickly realized, oh, that's problematic at a lot of levels. And that's when they coined that term ICO, right, as a coin offering, and said, oh, it's not a security, so it's fine, nothing to see here. And I think that's actually a little unfortunate because, as I said, the original idea behind blockchain tech and Web3 was always about, can we take assets or can we give people access to assets that you just couldn't get access to in any other way? And I worry a bit that we've been sidetracked with a bit of hype and speculation and etc. And at least companies like Fusang were very keen to bring back to that original promise and say, can we use this idea of tokenization, but to directly represent shares, bonds, funds, real estate, the other 99% of world assets, as I call it. And then we've built a platform where we think a combination of our regulatory licenses and technology platforms and kind of operational know-how let us take a generic asset or generic security, help with the issuance, tokenization, including the listing and trading.
How do you see tokenization in the scheme of what's important right now for security services and providing support to this ecosystem?
Yeah, just extending to what Henry has shared earlier, right? I guess, from a security services perspective, from a global custodian perspective, today, we provide the custody and servicing to 47 trillions of assets of our client, both asset owner and asset managers in more than 100 markets around the world, right? So it's really about the trust, the skill, and the resilience, the regulatory compliance. So that's one piece, right? So the second piece is that on that note, as we see the rise of mainstreaming of digital assets, whether it's a crypto or tokenized assets, you need to have that scale of infrastructure, which is what we have been focusing on, and that's really something that is also what our client has been expecting from us, right? So so the couple of things really that is key really from a servicing perspective. The three things that client is telling us. Number one is important to focus on trust and soundness, in the sense of focus on risk and compliance, regulatory compliance, risk management. Know your transaction, know your client, know your service provider, all those kind of stuff, right? And you must have really solid procedures around it. The second thing is that it's really around that institutional grade kind of solutions, in the sense that the scalability, in the sense of the ability to support the multiple type of tokenized assets, including those in the public space, the likes of the cryptocurrencies, right? And then also how do you deal with some of those unique corporations that is unique in the context of digital assets, right? Things like in the public space, you hear the fork, the airdrop, and all this kind of stuff, right? And the third thing is also about how do we deliver that capability in the way that's seamless. So what our client is telling us is that, look, I think whether it's traditional asset or digital assets, I need to have an integrated way of for you to safekeep and servicing those assets. And that's what we are working towards. How do we create? Our aim is to create that integrated capabilities that allow us to support our client who's actually would like to invest in these tokenized assets, right? Along with their traditional assets in the way that's integrated and seamless. So that is really sort of like the focus of we think is important as building up this capability.
Okay, very good. I think we're going to come back to some of these points, Johnny. Emma, I'd love to hear what's going on at Fidelity, major buy-side player. You represent the international arm of that business. Where do you see going as, when you think about blockchain-based finance, what's the use case? What makes it interesting to you?
Yeah, as a large investment house, we're in between, I would say, Henry and Johnny. So basically, we're looking at things in two ways. How we can tokenize the product that we are issuing, so the funds, and there we're seeing a lot of benefits in terms of distribution. So being able to distribute that to digital asset exchange, to touch new type of investors, benefit from the fractionalization, as Johnny said. But those are, I would say, the benefit in terms of sales opportunities. But there are a lot of operational components that blockchain enable, such as being able to basically streamline the value chain. So from the custodian, the transfer agent, the auditors, being able to enable basically bring on more data to investors, potentially bringing distributors on, and for the asset manager being able to have the full transparency in terms of who owns your shares, basically the fund shares. Today we don't have necessarily that transparency, so that we can provide better advice and recommendation as well to the end customer. So this is on the fund tokenization. Then we have how do we include digital assets in portfolios. So in the traditional finance space, like outside of cryptos, I would say we're looking at tokenization of securities. So how to partner with banks or or platforms like the one of Henry in order to integrate security tokens in portfolios. So here we see a lot of benefit on the private assets. So I think this is where Johnny said there is a lot of attractiveness in looking at assets that are illiquid today that we could fractionalize and potentially make that more liquid in the future, but as well embark a lot of data inside the token. That's the benefit, right? Because since with the fractionalization, the assets are smaller, but we still need to do our job as an asset manager in the investment process, right? To analyze and do the proper, deep dives in terms of credit analysis, equity analysis. And that's the opportunity, to bring on a lot of, information in order to fasten that process, but as well bring on new data. So back, on the ESG space. So this is where we can, combine those, financial and extra financial analysis inside the token. So on both aspects, we are working, and as well on pure crypto, we're looking as well. So we have issued an ETP in Europe, an ETF in Canada. The one in Europe is listed in Germany and Switzerland. And we're looking as well how, crypto, I would say cryptocurrencies, those type of assets, basically can be integrated in portfolios, and as well, how we can build up a crypto offering.
Well, maybe if I could just expand on what Emma was saying about settlement currencies. I think this is exactly why things like CBDCs are so important. Like it or not, if something is a fiat currency, governments are going to want to control all representations of their own currency, not least of which is because stablecoins, which I suspect a lot of people in the crypto world view as stable, uncontroversial, to me are actually one of the most problematic aspects. And I think this is why a lot of regulators are focusing so much on stable coins today, including, in Singapore, for example, where they're requiring massive capital buffers if, FIs hold stable coins, because these really are not currencies in many cases, right? There's a private issuer, and that token is probably best understood as a debt obligation, right? I've got a credit claim against an issuer. Very different from having a currency. I'm not sure if a lot of people understand that per se, that USD and USDC, for example, are rather different beasts. And I think that that's why regulators are so focused on it. And I think that's why CBDCs are so interesting to hold up that other leg, as Emma says, right? We need currencies, we need assets that you can trade. That said, I do think some cryptocurrencies like Bitcoin have a good shot of playing a real role as a currency, right? And that people can start to use that to trade and settle securities. But for that to happen, you're going to need to see issuers wanting to actually denominate the securities or denominate their bonds, let's say, in Bitcoin terms.